Everybody, what is going on? It is Crypto Bobby. Hope you are having a great day, great night, wherever you might be watching in from. We have a very special guest on the channel today. We have CryptoCred on to school me a little bit on technical analysis because I have no idea when it comes down to any of that. So we're going to have a good time talking about Bitcoin, some of the major altcoins, and really looking forward to this conversation. What's going on, Cred? How you doing?
Yeah, hi Bobby, how are you? And hello to everyone listening. I think first and foremost, congratulations are in order. I don't think I've formally, said on your full-time crypto gig.
Oh, thank you.
Especially in a market like this, making money is impressive enough. So maybe you can teach me a few things. But yeah, no, this should be very good, very interesting, and we'll try to get as substantive, detailed as possible in the time we have.
Yeah, absolutely. I mean, this should. I've been looking forward to this for a while. I know, just even on Twitter when I mentioned that you were going to be on the channel, it's probably the most positive reaction I've gotten so far. So I think a lot of people are looking forward to this, to this conversation for sure. And I think one of the things maybe we were going to start off with was kind of your like high level view, Bitcoin in general, but even just your background. If you wouldn't mind kind of diving into your background, maybe how you got into crypto and kind of how TA plays into that as well.
Yeah, sure. So in terms of Bitcoin itself, I had some when it was really quite cheap in dollar terms, six, $700. I did some freelance work translating some docs on the internet, and this guy wanted to pay me in Bitcoin. And I was like, well, it's money. I can probably sell it for fiat, so great. And he paid me in that, and I had a Coinbase account from like way back when. But then I kind of lost track and sight of it and didn't really follow it. And then it was really around the time just before the hard fork, sort of summerish of 2017, when it started cropping up in the news again and everything else. And that's when I really got interested. And TA specifically, it's just a bit of an odd journey, really. I was listening to a live podcast which you could jump in on TeamSpeak. So these guys are talking crypto, whatever. I didn't even know where I found the link. I think via Twitter. And this one guy said, yeah, I'm going to post up a few charts and we're going to talk about them. And in the comments section, they posted, all these charts with all these fancy lines, clouds, rectangles, and numbers, which meant nothing to me. And I thought, wow, that's, they were talking about like support, resistance, and whether it's going to go up and down. And it just seemed like the coolest voodoo stuff ever. So I kind of got into it from then. And yeah, that's my sort of foray into it.
Awesome. And obviously the past, I mean, I've been talking a little bit in the the past month, 2 months, 3 months, just about kind of how everything has progressed. And I think it's been a pretty interesting journey from the craziness of November, December, and early January into where we're at now. And I think a lot of people are kind of freaking out a little bit. We were kind of shooting the shit a little bit previously, just kind of about everybody's overall thought process, and where the market is. And like you said, in some cases it's awesome to be trading crypto full time or to be in crypto full time. In other cases, having that full time job might not be the worst thing in the world. But would love to just kind of kick things off with your thoughts right now on where Bitcoin is, and just get an understanding of kind of how you're feeling at this point in time.
Sure. So what I've got set up, you can see you've got your own custom chart layout on my trading view, which is a very special place. I've got Crypto Bobby here. And I thought a useful way would to essentially integrate both sort of my thought process and how I map the market, along with my view on Bitcoin right now, would to be kind of go through the three, four main time frames I use, talk about what I use them for, and then actually jump in and look at what Bitcoin is doing and relate it in that way. So probably just going to jump straight into it. So I essentially rely in my TA on 3 or 4 timeframes, which is fairly standard. The weekly, the daily, and so those are my large timeframes. And then I always have some intraday timeframes I look at, like the 1 hour and the 4 hour. And you can see, so I've outlined here really what I use the weekly for, and it's not a particularly long list, especially with Bitcoin, which doesn't have a super long history and then simply just gone vertical pretty much since inception. It's not going to give you all the information in the world, but I do think it's a slightly overlooked time frame. So the first thing is big picture. I want to see where we are, what this whole run looks like, where we are relative to maybe a year ago. When people make the comparisons to the bear market, I want to see what that looks like from a zoomed out perspective. But really, what I use the weekly time frame more frequently for is to get an idea of upcoming volatility, right? So just to preface, I'm a very, very heavy price action trader. So indicators play a very small part in my overall analysis. I sometimes flick them on to supplement what I'm thinking, or to see if there's, you know, confluence there. But really, it's just looking at the price where I get most of my information and trades. So in terms of upcoming volatility, as a basic principle, something I look out for in traditional markets, especially, but in Bitcoin as well, that noisy times are very often preceded by much quieter times. So expansion comes after consolidation, right? And you can, and this is the thing, we can see this from the candle bodies themselves, right?
Sure.
So the candles that jump out at me and sort of where we are now are these three candles here, 1, 2, 3, and then the fourth one. And so if you can, I mean, comparing it to some of these, this sort of mania, I don't think is a fair comparison, because the market's been, you know, a bit different since we topped out, and, you know, this run was something else. But just looking at from when we really started falling, you see you have what I call a sort of expansion candle here, which means there's a big difference between the open and close, got a big body. So you have one here as well, slightly different because of the wick, and then you have a much slower week, or an inside week, which means the range of the whole trading week is contained within the range of last week, coming after that. As you can see, if you go back on Twitter or whatever else, a lot of people are calling for a reversal, or just that, you know, this is the support and we're going to keep going. But really, now we know, of course, with hindsight, that this was simply expansion, consolidation, inside week, that all of this week traded within last week. So on the comparative scale, it was very not volatile. And then you can see what happened the next week, expansion in the continuing direction, right? And in general, even if on a basic level of analysis, you can see when Bitcoin has a quiet week, it ends up having a very loud week the next time round. And so very similarly here, and this is what I still expect volatility this week, because very similar sort of fractal. Yeah, the high momentum bearish week here, high momentum bearish week here, and then an inside week and a week of some consolidation. And that was last week. And then this weekly candle has already made some people lose quite a bit of money. So that's kind of how I contextualize on the weekly time frame to get an idea of what to expect. And then you see these horizontal lines here. I said I was a price action trader, and about probably 98% of the support resistance lines I draw rely on horizontal lines. It's just the tool I prefer. There's nothing wrong with trend lines. It's, again, very personal preference. And what I've marked out here is basically on a weekly time frame, what type of support levels I expect to be defended. Right now, I know some of the viewers might be thinking, you know, but what about this? We traded through it here, we traded through it here, etc. But if I'm looking at the weekly time frame, such a big level which covers a lot of zones, I don't really mind as long as price recovers on an intra-week basis. So one candle is 7 days of trading, right? If this could have been just one crazy wick and then we continue trading much higher up. So what I'm more interested in is, are these weekly areas of support going to be respected when it comes to the weekly close, right? So that's something that I pay a lot of attention to, the candle open and close. And that's where, you know, a lot of the time that's where the volume is. And a lot of the time the wicks can be interpreted to an extent as deviations, right? So if I'm contextualizing my support and resistance on the weekly time frame, which I don't necessarily trade off of, I still want to keep an eye that price closes above these major levels on the week.
That makes total sense. Is there, I know you had said it's personal preference, but is there, I mean, a reason, and I don't have one preference or another, me personally, but is there a reason you prefer the horizontal over the trend lines out of personal preference? Is there kind of a benefit to that in your opinion?
Yeah, I certainly think so. One of the things is, everyone uses trend lines, especially in crypto markets. It's kind of what you first learn, and what a lot of people, they sort of, you know, end up going down that road and not using anything else. And I'm almost a contrarian in that sense. I don't want to be looking at the same triangles, trend lines, whatever else as everyone else. Another reason is, when you're drawing horizontal lines, it's naturally a lot easier and a better fit, as we'll see on the lower time frames, to place them on essentially big turning points in the market. You know, horizontal lines correspond to a very specific price point. And I'm a big fan of that, and you can see how you will see the effect of that on lower time frames. And as you said, largely personal preference as well. And I also like, and this is more of a comfort thing, that since I'm not like a pattern trader or anything else, I get a lot of time to adjust these lines if I think the market has washed them or has traded through them to the point of being invalid. So, so I don't need to sit there and every couple of hours or at the end of every day see if there's a new chart pattern or anything like that.
Yep.
I've already got my sort of map of the market, and I can simply sit there and watch how it interacts with what I think are the key levels.
Sure.
So that's pretty much it. But as you said, it's pretty much personal preference. So if you don't use this, I mean, sure, give it a try. I think it's nice to give both a go and decide for yourself, but you're certainly not missing out on some massive gold mine because of it.
Awesome. And I know you'd mentioned before pretty active in terms of just overall trading, but how like when you're evaluating a potential entry and exit, like what's kind of your thought process there? How long might you wait, or how kind of far out do you plan out something like that? I'm just kind of curious to get your mindset as far as things go as well.
Sure. So in terms of entering and exiting, and to an extent managing trades, that's typically done on lower timeframes for obvious reasons. But a lot of the time, what you'll have is I'll be on a lower time frame, and then I'll already have. I mean, I'll just give a preview of something here. I already have like a map of the market that looks something like this, right? And if I know that there's something I want to be involved in, a price point that I want to be involved in, let's say it's this red line here. Again, we'll cover all this.
Awesome.
Certain technical criteria will tell me whether I have to either watch price as it comes into the level to either show me weakness or strength to set up a position, or B, or two, I forgot which method I used. I sort of look at a level, and my trading system allows me to buy it or sell it blind, right? So depending on how the level is built, the number of touches, the recency, the violence of the level, etc. I either look at the price action and make a decision while watching it if the market comes into it, or under certain trading rules, I'm allowed to just leave a limit order at that level because I think it's such a high conviction level I want to get in regardless.
Okay.
So really, to answer the question in short, I have my map of the market, and then if I see an area where I want to do business, that business will be will be conducted on a lower time frame, such as the 15-minute hourly sort of. We're talking really intraday here.
Awesome. I appreciate the explanation.
Of course. Cool. So that's pretty much all I do for weekly. Then we're going to what I think is my favorite time frame to do business, and that's the daily time frame, right? And these, again, so the format, as you've probably figured out, is I've got all the time frames and then what I use them for, right? So for the daily time frame, a lot happens. So one of the important things that I do, which I don't think enough people talk about on a high time frame, and in this case it's the daily, is I see if there's a directional bias in the market. Now, what does I mean, that's just essentially a fancy word of saying I'm looking for evidence on a high time frame of whether I should lean bullish or whether I should lean bearish. Now, a directional bias can take many forms. It can be a price pattern. It could be a candlestick pattern. It could be a whole range of things. But essentially, I look for those sorts of things to set me up and to give me an idea of whether I should be leaning one side of the market more so to the other. So an example of a directional bias would be this daily shooting star that we had here. Now, at the end of this trading day, what this tells me is I've got a bearish D1 bias. And so when I'm looking at my map of the market on the lower time frame, and I know that I've got a bearish directional bias, at that point, I'm almost looking for any reason to short, because my higher time frames are telling me that's the side of the market I should be on, or at the very least, I'm not looking for longs because that D1 bias means quite a lot to me. So that essentially sort of sets up what side of the aisle I want to be on. I also use the daily time frame for just general market structure stuff, and that's just sort of, where is the trend sort of thing, right? So lower lows, lower highs, higher lows, all of that type of analysis happens on the daily time frame as well. And up to certainly, if you watch one of my videos from around here, I think either one of these tops, I was reminding people ad nauseam that the market structure still remains bearish because we haven't closed or made a higher high from this, right? So we're falling off a cliff, lower high, lower high, lower high, lower high, no key swing points here. And we've come up here And at this point, if we don't make a higher high than this swing point, then the market structure remains bearish. You can see we tried here, failed, tried here, failed, etc. We will get into that in more detail, but generally, market structure happens on the daily time frame for me. So you can see these first two things is where I really get my my directional bias and an idea of what side of the market I want to be on. And I think it's often overlooked, and people attempting to jump into low time frames and see like, oh, what's the price pattern? Are we overbought, oversold? What's the cloud telling me on the 4-hour? I think, that all has a time and place, but I certainly want to know where are we? And I think in my system, the daily time frame does the best job of that. Are there any questions about that before I jump into sort of meat and bones of trading off these types of things?
No, I think that makes total sense. It sounds like I'm just kind of looking through the comments too. It sounds like there's a lot of kind of I guess agreement with that. So yeah, I think we can kind of jump into the next point. But that was a fantastic explanation.
Cool, excellent. Right, and so again, I said the daily time frame is where I map out a lot of my business, and then the lower time frames, my intraday, is where I'll actually be taking these trades. And so the other thing I use the daily time frame for is to get key support resistance levels and turning points in the market, right? And so an example of what that would look like are these blue boxes, for example, right? So I know that at this point, and I don't need to be precise, so I know that this is a major resistance level, right? You have this consolidation, you could call it an order block, whatever you want. Market traded back into it here, and it acted as resistance, let's say, and the same happened here. Now, some people might be thinking, well, you've got a price range there of 11,400 to almost 11,800 or whatever. Isn't that too much? And the answer is not really. Because for two reasons. One is if you see the size of the moves you get at these turning points, that much overshadows any sort of concern about not being precise enough. Like, for example, if your trade, like we know that this bottom level, and I still think this is going to be a key turning point. If I just zoom in on it really quickly, you can see that if market found resistance on this side, it broke, it flipped to support. So you can see the moves that it gives you really big. So the breakout of this resistance gave you a big move. Then the retest of it from resistance broken to support also gave you like a, $2,300 move. And then the breakdown and retest of this area again took us from 9.5K down to 7.3K, right? So when I'm mapping out these markets, this isn't where I sort of nail down and fine tune my levels. I want to get an idea of where are the key turning points in the market, and am I able, from a macro point of view, to map out the area where I want to do business. And as you can see here, that the reactions off of these levels are super violent. So it doesn't really matter that the zones can be slightly wider than perhaps someone would be willing to trade, right? And then to answer the question of where we are now for Bitcoin, well, look, to get into some real-time analysis, because we're on the daily time frame now, if I go from the bottom, right? So I think these daily lows, which we haven't tested, right? So any of these, from the moment we formed the low at 6K, this is a daily low we had, and then it comes close enough here, but the market hasn't traded through this daily low. So this is something I pay attention to, and in general, in my analysis, sort of a lot of it will depend on these 4 letters here: open, high, low, and close of candles. And these key areas, daily open, daily high, daily low, especially if they have confluence with support and resistance levels, they act as magnets for price. And they're something I pay a lot of attention to. So in terms of support for Bitcoin, at the moment during this live stream, a couple areas attract my attention. So I said these daily lows, if we sort of start falling off a cliff, is something I'll be paying attention to. And then on the daily time frame as well, and again, I do have more levels on the intraday time frames. I think 7.6, 7.8 is quite important. We see it was resistance on this side of the market, broke out. We got a retest here and really made you shake here on the much deeper swing, but then it was we came back to the blue pivot box before dumping further. Cool. Now again, the same question of, but didn't we break it here? Well, no, because on the daily time frame, I'm really concerned with, did price close below the level? The fact that it traded below it and closed this much above, I'm absolutely fine with. So again, macro daily perspective, daily lows as support, untested. 7.6K, I think, is really important. And that signs of that holding would be price not closing below it on the daily time frame.
Hmm.
And then the next really big area of interest where I'd want to do a lot of business is this sort of 9.2 to 9.5 pivot. As you can see, it's been throwing the market around really aggressively. Resistance, support, which gave you like over $2,000 move, breakdown, and then resistance again, which similarly gave you a 2,000 something dollar move, right? So when I look at this level, what that tells me is violence, and then we didn't quite get here, but I'm going to mark it out anyway, violence, right? And I'm a swing trader primarily, so I like violence. I want to catch the turning points of the market, and if I'm catching these $1,000-$2,000 moves, or even bigger moves than your average trader, I'm not too worried about catching the wick or catching the of either side of the market,
Sure.
right? And then obviously we outlined this area. This is quite obvious. We've got highs here. So far we failed to breach this daily close here and here. So that's a troubling area to say the least. And then above that is quite a basic SR level, which was support, market broke it. And again, this is something I look out for all the time, and what markets do all the time. They will break a support and then sooner or later come back to revisit the breakout level, which at that then point is essentially flipped, right? So broken support flips to resistance, and broken resistance flips to support. So I'm always looking to get in or check out what happens to price when it comes back and retests what was last support or what was last resistance.
That makes awesome sense. And so I got a quick question for you, but first, Cred's killing the content right now, guys. So if you are enjoying this, hit that like button just so that this video gets out to as many people as possible. Would love for you to hit the like button. Definitely helps to spread the live video out on YouTube. So thank you so much for that. But one question on my end. So like I said, my familiarity, I've studied a little bit just to get like a basic understanding of TA. So a lot of what you're saying makes sense to me. One thing I'm kind of curious about, like when you've drawn these lines of resistance and support, like they look fantastic. How long does it take you to kind of eye these kind of areas of resistance and support down? Is this something that, like looking at it right now, makes total sense, but maybe, I don't know if this takes you 30 minutes, a day, 2 days, like just kind of curious about like what that process is like for you as far as creating this chart in general.
Yeah. So this was cooked up last night, and the real work comes when we jump into the intraday timeframes, right? You can see there's a lot of business there. But really, a lot of it comes down to screen time. I've spent a silly amount of time just sitting here and eyeing out these horizontal levels. So it's odd when I read a chart. A lot of people think that you start from the left and you kind of see what the market does there. I don't actually do that. The way I draw levels, I actually start reading the chart from the bottom to the top, from right to left. And the reason I do that is because one of my categories for what makes a good level is recency, right? What was the recent interaction of the market with that level, and what did it do? And because obviously the recent price action is always going to be closer to the right side of the chart, that's where I start reading it from, to make sure I'm not being like, oh, it was great, let's say great level here, but then the market ignores it completely. That is a bad level under the sort of criteria I use. So I actually read from right to left, bottom to top when I do these things. To give you an answer, it really depends on the market. Some markets are a lot nicer in terms of giving you levels to trade off of than others. Because I keep an eye on traditional markets as well, your currency pairs and all that. Bitcoin is quite nice for this sort of thing. So cooking up this one, I'm not sure whether I can give an accurate answer because I had a few of these on my personal chart or whatever else. Maybe about 20 odd minutes, 20, 30 minutes. And then I'll sort of leave it and then come back to it to make sure I haven't missed anything. But roughly around there. But it's screen time, Bobby.
Sure.
The more time you spend staring at these things, you'll just start to see things that other people don't. So don't feel discouraged, for your listeners or whatever, if you're sitting there thinking, I can't see a single level, or I want to draw a level everywhere. And one thing I'll mention is that every single tool I use and every bit of analysis I cover, I actually have lessons on. and they're free lessons, right? So I have a 1 hour long video on drawing horizontal levels and what makes a good level, etc. And if you want access to those, they're like on the pinned post on my Twitter, on my YouTube, etc. I hope Bobby doesn't mind the little shill, but they're all free.
No,
so, you know.
I'll link to, so I think I have your Twitter. Your Twitter should be linked in the YouTube description if it's not yet. I'll link your Twitter and your YouTube profile in the description and in a pinned comment after we get off this, because yeah, you're providing some damn good information, so I'm excited about yeah, definitely want to, if anybody is not familiar with you so far, they certainly should be.
Yeah, that's, you know, it's good news for the viewers that you can learn. Well, I've taught it the best I can and certainly covered everything I know, so don't feel disgruntled if it just seems like I'm just drawing random lines after the fact. Cool. So unless there are any questions about the daily, and you can see it's an important time frame, a lot of analysis gets done on that. I'm going to jump onto the intraday time frame.
Yeah, that'd be fantastic.
Cool. So in terms of intraday timeframes, a very similar type of thing, except they serve a much more specific purpose, which the others don't, which is I will typically use either the 1 hour, but sometimes even lower, your sort of 15-minute, or maybe sometimes even 5-minute, but really just your intraday timeframes for my entry. So once I've mapped out the market, and a lot of that mapping does take place on the 4 hour or the hourly time frame, I certainly look to get in on a lower time frame, right? Now, another important purpose I use the intraday timeframes for is to really give me a map of the market. Now, what I mean by that is, let's say, for example, that I enter a trade on this daily support here, okay? And then let's say my target for the trade is, for some reason, I've chosen the 4 hour resistance here, right? So essentially my entry, again, purely hypothetical, just to explain a point. Let's say I entered here, and then I'm telling myself that, well, where do I really want, what do I think is, where's my target for the trade? And let's say I chose this, these highs, this 4 hour resistance block. Now, if I open a position, and let's say it's on BitMEX, and I see my P&L chopping up and down, green, red, seeing the amount of Bitcoin I'm making or losing, that thing can get quite stressful. Now, what can get more stressful is if this disappears, right? So at that point, I have nothing between where I'm entering and where my target is, right? I'm just simply a slave to BitMEX and watching the amount of Bitcoin I'm making or losing go up and down. So a lot of these levels, this is essentially a long-winded way of making a single point, that a lot of these levels, I don't trade them blindly. I don't trade every single level that's on my chart, but yeah, sell here, then buy, sell, buy, sell, etc. A lot of these I'll use as a map of the market. So if I'm in a trade, I have a rough idea of who's what where, and that's for two reasons. One is, again, just so I sort of know what's up and I don't start panicking, but another reason is that I would rather have levels on the chart before I take a trade that I charted when I wasn't biased or there wasn't any money on the line, and so I know they're sort of legit, rather than, let's say I open this trade and I start losing or I start panicking, I start like drawing on extra levels once the trade is actually open, right? So it's almost like an insurance policy of the emotional kind. So that's what I mean. You know, I don't trade every single level. I use them as a map. And it's, you know, sometimes what I'll do is I'll make one dotted if I think that I just want to have an idea of where this is, but I'm not going to trade it. And then if I want to really trade one, I'll change the color, etc., etc. Does that make sense?
Yeah, it makes total sense.
Cool. So yeah, and then I touched this when I was covering the higher time frames. It's really refining the tradable support resistance levels that happen a lot on the intraday time frame, the 4 hour and the 1 hour. So if we look at Bitcoin right now, again, I do want to cover both. So we had a daily support level at 7,678, and we know that this is the resistance turned to support, and then the markets come back to it again after some nice space. Now you can see, as usual, as has been happening the last like 2 days with Bitcoin, there's a bit of front running happening, in the sense that sometimes when you have a major level that a lot of people are looking at, the bids start to come in a bit earlier than you'd like, and you don't get filled on that type of thing. But regardless, another maxim that I stand by is that support resistance levels, they're zones. They're not specific sort of lines. Some of them will end up like perfect lines in the sand and you'll feel great. But with any tool you use, if it's trend lines, if it's this, that, or the other, support and resistance, that concept, it's a zone. It's an area of interest. And very, very rarely will it be just like a specific wick and then a specific wick and, you know, you're a BitMEX god.
Yeah. It's not perfect every time.
Well, exactly, right? So we know at the moment that this daily support is being certainly respected. We're getting a reaction off of it. And then another way you could conceptualize that on the lower time frame is if you see that we have this cluster of support last, resistance, and you could even draw a lower time frame level like on this kind of thing here, right? So you see on the hourly, market traded into it. And again, I love support resistance flips, right? Those levels tend to be really good. And I cover this in the lesson. So you have market finds support here and you get a violent reaction. Trades below it, retested from the other side as resistance, you get a violent reaction. And then you see when the market comes back to it, it was previous resistance pre-break, makes you sweat a little, bounces, and then we traded into it again. By the way, just from a technical perspective, I'm not usually a big fan of this type of stuff. When the market comes back to revisit a level with very little space and very soon after it's already been tested. But this is crypto, so it doesn't always follow the normal rules. So, I mean, hey, I could even add that onto the chart right now. But this is an area which is quite interesting. And by the way, I get so many questions on visibility and how do I get the text. Guys, just click on the line, go to visibility, and then you can choose which time frame you want these levels to appear on. Right, so you can see when I've got all these 4-hour hourly levels, it would look like a complete nightmare trying to have those on a weekly chart. Right, so just click, unclick, whatever way you want to see them, and then if you want to leave text on them, like I did, just go to Style, Show Text, and let's do H1 support, for example. Right, okay. So getting a reaction off this level. Another thing that I haven't taught on a course yet, but this, not to confuse anyone, this is typically called a swing failure pattern. So when people say patterns, the mind usually goes towards triangles, pennants, flags, head and shoulders, and all that kind of stuff. But you do also get price patterns, where the price action itself is, you know, sort of gives you a setup. Now, this pink line is actually what's called a swing failure pattern. Now, what does that mean? It means that the market has created a swing point on this low, and you can see that's characterized by a deep swing into the level and then a reasonable swing away from it. And then at that point, the thesis for this type of price pattern is below this low, there are sellers, right? So who's selling below this low? Well, anyone who's long will have a stop loss. Logical. Well, a lot of people think that that's sort of logical stop placement. You put your stop loss below the swing low. And then you also have people who saw this dump, they want to short, and they're like, oh, dude, when that low goes, I'm all in short, right? And then if we zoom in on price, this is a classic price pattern that you see. What happens is the market trades below it. It creates those sellers and takes out their stops, right? Either sell stops or stop losses if they're long. Either way, we know there are sellers under here, and then closes above, right? So what's the significance of that? Well, a couple things. One is when the market trades below a deep swing and those sellers get triggered, that provides liquidity for longs, right? So if you want to buy, this is a simple way of saying it. If you want to buy, you need someone to sell it to you. How do you get the people to sell it to you? Make these guys think that it's going to go a lot lower. And that's what happens here. Market takes out a low, closes above it. And at that point, let's say you're at your computer, you get your ping that you've been filled for a short, and then you see this. And you're thinking, oh, crap. I'm clearly offside. I was expecting this to dumpster, but now the market is sort of not doing what I want it to. And you can see you're getting a reversal off of that now. And again, if you're a big player who's packing a lot of position size, you're not going to be buying and selling at market. You need to create sellers to go long and create buyers to go short, right? And so that's essentially what's been done here by this price pattern. There are sellers below this low. They're goaded into selling and their stops are triggered by a move below and close above. And then all that long liquidity is collected. And at the same time, they realize that, oh God, I'm wrong. And then they buy it back and you get that type of reaction.
That's an awesome explanation of that too. I appreciate that. And I think that's something that, I mean, if you're you're a degenerate like me on crypto Twitter every 5 seconds of the day, anytime there's a significant level of, kind of support or anything like that, you always see that, and then somebody's tweeting out, all the stop losses just got taken out or something like that. And
Yeah.
then, like you said, there's that bounce, and it's kind of like psychological mind games for some of these big traders.
Oh yeah, absolutely. They need to put people on the other side of their order. So if they want to go long, they need to create sellers. And where are sellers? Typically below deep swing lows in the market, and then where are buyers? Typically above deep swing highs in the market. But again, this is like, I don't want to get too far into it because you could be here all day. Now, really, the next major level of resistance that I have on Bitcoin that I think is going to be quite decisive is 8,300. Right now, while these types of things are significant and probably worth paying attention to, like these highs here providing resistance, sure. I don't even need to explain this, right? Market came into it. You have these long wicks, sellers, and then a big rejection. And then so when market trades into it again, a lot of people are anticipating that we'll get the same result and to get sellers down here again. And then, you could potentially draw this out and, you could be here all day. But really, I'm interested in 8,000. If you want to convince me of a bullish case, at least for the short term, I'm interested in 8,300. And why am I interested in 8,300? Well, let's map it out. As you know, I like trading support resistance flips. One of the things that I like doing is trading what's called the inverse, right? So if a level performed the specific function and then it's broken, you want to use it for the other purpose when the market comes back to it, right? So you see it was support here, and then you see these are violent support levels. So market swings into it, big rally. Market swings into it, big rally. Market swings into it, smaller rally. But at this point, it's a 3-touch level with a lot of space. And so at this point, now that it's a support that was broken, the level flips and it turns into resistance, right? And because it was giving this level was giving these violent moves, clearly a lot of activity going on. Now that it's been broken as support, and it's above market, so it's resistance, I'm really keen to see what happens if price is allowed to trade back into it, right? I think this is, in terms of short-term turning points, this is certainly going to be one of them for me at 8,300, 8,200. I mean, you could already redraw the level like this. You see connecting this low and see the reaction that happened when the market even came close to it, right? You get this wick and then a cliff. And then a lot of the higher time frame stuff starts coming into action. And again, this is what I'm watching right now because for obvious reasons. Now, a lot of the higher time frame concepts we talked about start springing into action as well when we jump to our lower time frame. So you'll remember this box that I had on the daily time frame, right? That was clearly an aggressive turning point for the market. So that was around 9.3, 9.95 or thereabouts. So you can see the specific price level that I've decided to use was 9,400 for it. Now, why? Well, 2 reasons. One is from a specific support resistance point of view, it meets sort of all of my criteria, right? Support here, deep swing broken, retested, continuation, gives you some support here, breakdown again. But what I love especially about these levels, and again, this is something I teach in my free video, so don't feel you're going to miss out, is this touch here. So one thing I mentioned to you, Bobby, I pay a lot of attention to recency, right? What did the market do the last time it traded this level? You can see it gave this support, well, at that point, resistance level, what I call a nice little kiss with a wick, and then it fell off a cliff in very relative terms, right? So this is a level I like a lot. And then another technique that I use, if I want to map out sort of where are we in the range, I hope most of your viewers agree that if we're talking about the range, this is the swing high, at least the recent high of the range, if we're talking macro, and this is the swing low, right? So this is the high we made before we started making lower. So up until here, we were sort of bullish. We're making higher highs and higher lows. This was the swing point, and then we fell, lower lows and lower highs. And then at this point, we started the uptrend again. So in short, uptrend, swing point, downtrend, swing point, uptrend, right? And so if I want to know sort of, okay, well, where are we in that type of range? What I will do is I will actually use my Fibonacci retracement tool, right? And I use magnet mode just to get it right. And I'll fib the top of the range to the bottom of the range. And you see that also gives me 50% of the range. And so just from a market mapping point of view, I know that if we're below 50% of the range, that the likelihood of spending a lot of time at these lower supports is higher. And then if we're above 50% of the range, the likelihood of spending more time at these higher resistances is higher. Not to mention it, that the 50%, I mean, it's not technically a Fibonacci number, whatever, it's still respected by the market. This 50% level, or 0.5 fib, even though it isn't, is still used a lot by traders, right? So I've essentially set up a really important reversal zone or pivot, whatever you want to call it, at 9,400, 9,400 in this case. Now, I hope your viewers can see that you can essentially remedy this type of big box concern that people have. Be like, hey man, if it's between 9.2 and 9.5, how the hell am I supposed to trade that, right? And the answer is, on the daily time frame, in most cases, you're marking out a zone, and then the lower time frames will actually give you a much tighter range for those types of trades, which in this case, you can see it would be between the SR level that I've chosen, 9,400, and the 50% retracement at 9,470. It's a $70 range. I think that's pretty clean. Are there any questions about any of that so far before we climb up?
Yeah, so I'm just taking a look at some of the questions in the chat. I mean, I think you're breaking things down really, really well. So I think I mean the clarity on that is, from my end, it's pretty solid. So we can definitely move on.
Great. One thing I will mention is because I showed this chart to a friend and he asked me, why is this 4-hour support? Why is it dotted? Right now, I sort of give a lot of deference to higher time frame levels. Because they're much less likely to just be noisy, more likely to be respected, and just these daily zones tend to carry more weight in my trading system. And again, this is all in the video, blah, blah, blah. Now, as you can see, there really isn't much space between the 7.6K daily support level and then this 4-hour support level at 7,535. And we know that our high time frame levels also give us violent reactions for the most part, right? And as traders, we like violence because that means volatility, which means hopefully, if you're on the right side of it, making more money. Well, big if, right? And so the reason this 4-hour support is dotted is because I still think it's important, but if we break this daily support and don't respect it, I think it's going to really be bad news, right? So the kind of trade setup that I'd be, again, we're not there yet. The type of trade setup that I'd be interested in taking is if we see a break of this daily support, potentially bounce at the 4-hour, and then I would wait for price to show me weakness as it came back into the daily support. So again, it's a standard flip that we talked about, right? Market is using this as support. It's broken and it's now resistance, and I'd be looking for weakness on the retest to give me an excuse to go short. And then just a very, very quick note on that as well. It's not good in terms of a level holding if the market tests it a lot and in a short space, right? So it's really nice when you get these clean levels that it was resistance, it broke, and it had this beautiful rainbow and it came back to it, right? Or the same if it's a support that broke and, it spent a lot of time away from it and then came back to it, those are great. But if price with minimal space and time is hammering away at a level, it's much more likely to break, right?
Sure.
So then going back to where we're at, so then I've got an hourly resistance level. We talked about 8,300. And then the next one is, I'm sure lots of people remember this, and I do want to make a comment about basically this. So I remember this day quite specifically because so many people were complaining about the chop on MEX or, algos just wrecking people, whatever you want to call it. Now, most people don't realize that you were trading for Bitcoin, at least quite a reasonably tight range, right? And you can see, these candles and all that. So a lot of people were trading this type of range and surprise, surprise, getting chopped up, right? So when I see a range, unless I'm quite confident that I've got some sort of low time frame technique or setup that I want to trade, I think the much better play under my trading system is to actually wait for a breakout of the range in either direction, right? So from a risk reward point of view, I don't want to be moving within this and trying to catch a couple $100 either way. I'd rather catch a breakout and a retest before it dumps further, or a breakout to the upside and a retest before it goes off. So this is why market mapping is so important, because while on the hourly time frame this might seem like the most important thing in the world, If you're not a type of lower time frame trader, you might want to zoom out and say, hey, a lot of people are losing a lot of money between this type of thing, right? Like a lot of money is being lost here. And so you might say, I'm going to wait for a breakout of the range, a clearer picture, and then to take a position. You don't always need to be in a position, right? So in terms of the 4 hour, I think 8,300 for me is more important than 9K personally, because I know this is a strong support turn to resistance. But then mapping the market, it's quite clear that these highs have provided plenty of resistance to price, and that's the next area I'd be interested in. And now, you know, I don't really like longs that much at 9.1K. And the hawk-eyed viewers will know why, and it's because I know that the 4 hour is a really, this 9,400 is a big turning point in the market, right? So let's say I get a long at like 9,100, 200, my risk reward isn't that great because I risk price falling back essentially to the range, if not the bottom of the range, but my reward, if I'm being careful, is this 9,400 level, and that doesn't add up very nicely. Does that make sense?
Yeah, it makes total sense.
Cool. And then really from there, you know, if we jump $1,400, what I like about the sort of system I use or whatever is I don't really need to change anything, right? I've got these levels. In my mind, they're really important turning points in the market. And I can quite literally, you know, right click on them, alert, and then set an alarm for when price is interacting or crossing that level. And I sort of can essentially kick back and watch to a certain extent, and that's of course I want to take a trade. And then the levels I have above market, and again very similar criteria. I think 10.4K, if we get there, is going to be quite important. It gave you support, resistance, support, and then this is what I like. It was support last, so it goes back to that trading the inverse stuff that I talked about. That if I get a chance to sell. So trading the inverse, if someone wants to just write it down and they're like, what the hell is he talking about? Trading the inverse is selling what was support and buying what was resistance, right? And those tend to be quite nice, higher probability setups from the stuff that I've been taught and I'm aware of. So I quite like 10.4 for that reason. It's an SR level with the requisite touches, resistance, support, and then it was support here as well. And then 10,700, similar reasoning, support, flip to resistance, cliff. And then another really one I like a lot is at 11,200. But then really we're dealing at that point with these highs here. So that's going to be interesting regardless, right? And again, I reiterate that a lot of these levels, I'm a discretionary trader, right? So I don't have a system which strictly tells me like an algo or a computer program or a formula of some sort, which tells me you must sell at every single level you have, and then you must buy whenever it comes back to it, something like that. That's not how I do things, right? A lot of these serve the purpose of being a market map and making sure I know where we are, even if I'm taking big trades. And again, the example I love using for this is if I want to trade off of this 4 hour pivot, like let's say it gives me bullish price action and it does something like this, that it breaks through and then it gives me a good retest. And then, like let's say a bullish divergence of some, hidden bullish divergence of some sort, candle pattern, whatever it may be. Really the next target area I would have, and the more important turning point is this, right? Because it's our 4 hour level and it's 50% of the range. So it would be seen like a reversion to the middle or to the mean kind of setup. But I don't want to be going long here and having nothing between my long and the target $1,000 away.
Yeah.
Right? So having this level here doesn't mean I'll automatically sell the whole thing when it gets here. I just want to know where are we at and what can I expect as the market drifts or flies from level to level.
So one thing that came up in the chat, and I'm kind of curious as to your take, is I mean, as far as like news-driven events or just like fundamentally speaking, are you strictly looking at the charts and the technicals, or do you pay any credence to what might be happening outside of outside or in addition to what is going on the charts for you? Is there any kind of any thoughts for like the fundamental analysis side, or are you really just more on the technical side?
I'm heavy technical, and especially for Bitcoin, where there isn't that same established network of we don't have Bloomberg terminals for Bitcoin, right?
Totally.
And so news tends to be a lot less predictable in its effect on price and that kind of stuff. One thing that I do look at for news is obviously volatility and price reaching for liquidity in those types of areas, right? So what you get a lot in traditional markets is that when there's pending news, price will get sucked in to completely the wrong side of the market, and then when the news hits, it will turn on its head and go in the opposite direction. So I'm aware that around the news you can get big moves and you can get volatility, but I don't trade news, and I certainly don't adjust my technical levels based on news either. Quite simply, my strategy around that is I expect more volatility, and I expect price to reach to where there might be high levels of liquidity as well. So I kind of factor it into my analysis, but I don't let it drive it per se, if that makes sense.
Cool. It makes total sense.
Yeah. So this is kind of my map for Bitcoin. This is how I do things. Just to sum it up really quickly, the weekly time frame I will use to get an idea of what I expect the volatility to potentially be like for the week, and to get an idea of what these long-term high time frame levels, whether they're going to be respected or not, these zones. And again, I'm looking at a weekly close above or below them to really get an idea on this time frame. On the daily, a lot of work gets done. It's almost my primary means of mapping the market in terms of the zones that I think are interesting and that are going to be pivotal, and the ones that are going to set up my trading opportunities. Really important that the daily time frame I use for directional bias, if there is one. There isn't always one, which is worth saying, and to get an idea of whether I should be on one side of the market or the other, or at least more biased towards looking for opportunities on one side of the market or the other. And the point I made about daily highs, lows, open, close type of stuff, really attracting price in many cases. And then once I have an idea of where I want to do work and areas which I think are going to give me some very nice setups, it really comes down to the 4-hour, hourly, and then sometimes lower, but not for drawing levels. So I draw the actual lines on the 4-hour, on the hourly, if I'm mapping them out on a lower time frame, but I'll actually enter and exit either on the hourly or on a lower time frame, right? But the example at 9.4K is very nice, that I know this is a zone where I'm potentially want to get involved. How do I refine it? It comes down to lower time frames and seeing if there's a nice level which has confluence with my idea. It's really important to note that I don't trade. If there isn't a support resistance level at a certain price point, I won't trade it. That has to be that has to be the basis for all of my trades. And if it's not there, then for me there is no setup. One thing I didn't touch on actually is indicators. Did you have a lot of questions about that by any chance?
Yeah, we were definitely seeing some questions about indicators. And prior to getting into that, one thing I will say too is I just kind of like the simplicity of the way you approach things. Starting off on the larger time frames with the weekly, going down to the daily, and then kind of as you evaluate opportunities, getting more and more kind of detailed and shorter time frames. So I like the simplicity. It makes a ton of sense to me personally. I think the way a lot of other people approach it or explain it can often be confusing. So I think this is definitely kind of I think it's something that helps understanding a lot and makes a lot of sense to me. But yeah, the indicators is something that I've seen a billion different questions in the comments on, whether it's been Elliott waves or kind of fib trends or whatever it might be. So I would love to hear any thoughts on that.
Yeah, cool. So really, as I outlined in the beginning, I'm a very price action guy. Most of the times I will simply just not even look at any indicators because I have no need for them, and the price itself gives me the information I need, whether there is a setup to be taken or not. One thing I definitely don't do is trade off of indicators alone. Right? So you get a lot of people being like, oh, the RSI was oversold here, so I longed, and that type of stuff to me is not something I do. And and that's almost that's for two reasons. One is, as I said, preference, price action, etc. But the second one is almost just logic. If it were that easy to make money in the markets of trading off overbought and oversold oscillators, the overwhelming majority of people wouldn't lose money in the markets, right? That's kind of what always sort of made sense to me. So to answer the question, I use a couple of indicators, and so the ones I use are exponential moving averages. And now it's important to say that I won't trade based off of exponential moving averages. So, a lot of people are like, oh, this EMA is acting as resistance, or hey, this EMA crossed, does that mean you short? No, it doesn't. The primary reason I use EMAs is just to see where they're at for a start. And also I like seeing what other traders will be looking at, right? So let's say I have a support resistance level coming at around 9K, which I know that I do from here, right? I can flip on the daily EMAs and see, hey, a lot of traders are going to be looking at that because it's the 200 EMA is also in that area, right? So I sort of use it to supplement my analysis and get an insight into what other people are potentially thinking. And I only use EMAs on the daily and sometimes on the 4-hour. But I don't trade off of them based on as support resistance, and I don't trade their crosses either. So that's just how I do things on that. Now, really, where the grunt work of any indicators I use gets done is to do with the RSI. And I have got a 1-hour long video on RSI. So for those of you who, if you think you know the indicator, let me tell you that you don't. There's 99% chance that you don't.
And real quick, not to interrupt, but I put I put a link to your Twitter and to your YouTube channel below in the description. So if anybody is not subscribed to your Twitter and YouTube, check that out in the description below, and we'll give you a chance at the end too as well.
Excellent. Thank you very much. Now, just a very quick note. I mean, I have to look at this slightly more closely and zoom in, but this might be a bullish divergence forming on Bitcoin as I'm just sitting here and looking at it, which is typically a bullish trend reversal indicator thing. So that actually leads me into my next point quite nicely, that when I'm using indicators, 99% of the time what I'll be using them for is to identify divergences, right? And the indicators I use to identify divergences are the relative strength index. This is the standard built-in RSI, and then also the OBV oscillator by Lazy Bear. So people, I get a lot of questions like, do you look at volume? Do you look at volume bars, etc.? I don't, because I don't think crypto is the best market for it, and more pertinently, because I think any information I could want regarding volume is, for my purposes, covered by the OBV oscillator. So when it comes to indicators, just to sum up my position, very minimalist. I will not blindly trade off of them. I will only use them to supplement my analysis, but I use them on all of my trading timeframes to see if there is divergence. So the daily, the 4-hour, and the 1-hour. So a classic example would be if price is coming into a key support level, and I want to know the likelihood based on my technical indicators that it will hold, right? And you can see this is actually a perfect example. We drew this area. This hourly support that we drew, this hourly support and, the one below on the daily, when price is falling off a cliff, falling sharply into it, one thing I'll do is see if there's an oscillator divergence there, which may suggest that price will hold it. And in this case, we actually had a standard bullish divergence as price came into it. You can see that your oscillator made a higher low, while if you line up the same points, price made and I'm just going to line it up here to make it really obvious, price made a lower low. So, again, I've got a 1-hour long video, so you'll have a lot of time to catch up on this if you're interested. But basically so this is what I mean by using it to supplement my analysis. I have a level here anyway. So I'm allowed to take a trade, or I'm certainly allowed to look for a trade and see if there's an opportunity there. Now, the oscillator supplements my analysis that, hey, this support is more likely to hold, or has a higher probability of holding, because essentially a bullish divergence, a standard one, typically means trend reversal, or a weakening of the preceding trend at the very least. The preceding trend is bearish as we're coming into it. We're coming into a cluster of support levels, and the oscillator on the low time frame, or in this time frame at least, is telling me, hey, there's some strength coming into it. Right? So that's kind of how I use my indicators. And I do that on daily, 4-hour, 1-hour, primarily RSI, and primarily OBV oscillator. One thing I'll note about this kind of thing is it really depends on, you need to be aware of what time frame does what for your indicators. So if I'm looking for long, like big picture trend reversal or continuation, that's going to happen on the daily. right? But if I'm trying to catch like a very steep move, the daily and the 4 hour to an extent aren't going to be of good use to me. Especially when you see price going very steeply up, or very steeply down, or very steeply up. A lot of the time, the higher time frames won't catch up and won't tell you whether this trend is going to weaken or whatever else coming into the level. So I'm trying to time a trade, and I'm doing my entry on the 15, 30-minute hour. I will use the 15-minute, 30-hour to get an idea of whether an area I'm looking at will hold or not. But again, sometimes I will just not look at it at all, right? If I have doubts about a level, I might look at it. Or in general, I might glance on the 4 hour and daily to see if there's some sort of bigger picture divergence. But it's not a prerequisite of my system to look at indicators.
Sure. That's interesting to hear, and I kind of like the fact that you look at things, number one, to supplement kind of your thought process, and then you also look at other indicators to understand what other people are commonly using and how that might affect kind of your thought process too. So I thought that was a pretty interesting when you were talking about the moving averages and how you look at what other traders might be looking at, not necessarily to base your opinion off of, but just to get a feel for kind of the overall market in depth.
For sure. Yeah, that's the best summary of it.
So one final question here, and then
Sure.
we can kind of move on to just having you tell everybody where they can find you and kind of your back, or just how they can continue to stay in touch with you. But I've seen some questions about like volume and how that might come into factors for you. Is that involved in your thought process at all? And what are your kind of thoughts on? Okay.
But differently to many other people. So a couple of things about volume. So a lot of people will use, it's the standard. I think the volume bars at the bottom are the most common one. They say, this is a very high volume of selling, buying, etc. Now, I don't personally use this. I haven't found it to be totally helpful in crypto markets. For one, I mean, for example, a lot of people say, hey, when you get the highest volume of, you can use it for historic purposes to see, which days had the highest amount of buying, and that can correlate with big moves. But that a lot of the time, that's going to be hindsight type of stuff,
sure.
Right? And so for me, there would be the strongest case for using these volume bars would be when you have a chart pattern, right? So I don't know, a lot of people seem to ignore this, but a chart pattern doesn't only involve the formation of it on your candles, but a lot of all chart patterns, I think all, but most, certainly the mainstream ones, actually have a volume profile that goes with them. So, with the head and shoulders, certain parts of that formation will need to have higher or lower volume than the other. Same for your bullish and bearish consolidation patterns like flags and so on. You're typically waiting for decreasing volume and that kind of stuff. So I would only be using that for those purposes, to see if the volume, if I'm trading chart patterns, to see if the volume profile of them coheres with the pattern itself. But since I don't trade chart patterns, that's not something I use. I don't ignore volume completely. And as I mentioned, the sort of version of volume I use is the OBV oscillator. Sure. Now, I think this is hugely underrated as a tool for figuring out when volume is essentially diverging away from price. So you see, this is a very good example here. I don't remember why I didn't tweet it, but I certainly shared it with friends. As you can see here, the OBV, your sort of volume, is decreasing, right? Well, what's price doing at the same point? It's increasing. That's your bearish divergence, right? Because as price makes a higher high and your oscillator makes a lower high, that's bearish divergence. And it shows you that volume is kind of seeping out of the market as it's approaching this level. And that's bearish, and you can see the move down followed. Even if I look to its right, you can see the same thing here. Price made a higher high, oscillator made a lower high. Again, bearish divergence, and the move down that followed was quite impressive. Now, I like it because this isn't hindsight type of stuff. This will form as it will sort of follow the candles because it's an oscillator, right?
Gotcha.
So I don't need to wait for the 4 hour, for those to get a picture of the bars, etc. And it just gives me a much clearer image of the divergence if there is one. So my use of volume is limited to essentially the OBV oscillator, and I look for divergences from price action.
Awesome. That was a great explanation and cool to hear too. I mean, as far as like not really trailing and kind of out, sometimes the straight up volume that a lot of people look at maybe isn't as helpful. I've definitely learned a ton from you today. I'm probably gonna go back some point today or tomorrow and actually rewatch this video just to make sure I didn't miss anything, because I'm half the time looking at comments, just kind of keeping an eye on everything as well. So I'm definitely going to rewatch this, and it's the feedback I've gotten on Twitter and in the comments so far has been awesome. So I appreciate taking the time to join. But for anybody who wants to kind of stay in touch with your content or kind of what you do, would love to have you kind of give an overview of where people can find you at,
Sure.
as well as how they can kind of continue to interact with you in the future.
Yeah, absolutely. Well, first of all, thanks for having me, Bobby. It's been a blast, and hopefully the first time of many, or at least not the last time.
That'd be awesome. Would love to have
I'll
you
let
back
the
on.
like and dislike ratio of the video decide that one for you. But yeah, if you want to keep in touch, so Twitter is CryptoCred. No underscores, no fancy things. And for those of you who are interested in the sort of techniques and the TA lessons, whatever, I've got a bunch. So if you go to the pinned tweet on my Twitter profile, there's a link to Google Doc, which has like all of my lessons, and they're all really long and really detailed, right? And those are all free, so you don't have to pay for any of it. So just click it and learn. So that's Twitter. YouTube is CryptoCred as well. And a lot of my lessons are on YouTube. And then also I use that for Bitcoin analysis videos, usually 2 times a week or thereabouts, where I do this kind of thing. But less sort of explaining what I'm doing and more of a sort of macro, actual, just looking at the price action and saying, what I think is going to happen.
Sure.
And that's at CryptoCred on YouTube. And I think if you have those two, you'll struggle to lose me.
Awesome. Well, I appreciate the time. Thank you, everybody, so much for your time. If you enjoyed this, hit that like button so this gets out to as many people as possible. And I'll definitely share the if you didn't catch the entire video, I will share the kind of recorded video version of this on YouTube or on Twitter shortly. It'll be on YouTube shortly as well. But thank you guys so much for your time. Really do appreciate it, and hope you guys have a good one. And thanks a lot, Cred, for your time as well.
Thanks.
Have a good one, everybody.